with it, markets open in Asia this morning with oil prices and all assets taking a bounce after a rather turbulent downward move last week. Let's kick off with Matt Stanley, Director of Star Fuels, sitting in Dubai in the center of the geographic world. We'll claim that title this morning if for no other reason that we're in the middle of East Meets West or something like that. Matt, your thoughts overall as we come back to our daily podcast after a few weeks at the beach. Clearly the markets have taken a bit of a turn. Your overall assessment of August?
Yeah, morning, Sean. I blame you. You go on a summer holiday and the market collapses by $10 a barrel. So, I mean, you've got to take responsibility.
I should have shorted. I put on my shorts instead of shorting. Wrong choice.
Well, at the end of July, Brent was at 76.40 a barrel. It was talks about $100 oil were not delusional, were not out of the realms of possibility. And then I think slowly but surely data started coming in July. You know, Chinese, there's a sharp slowdown in growth there, even though they are still growing. PMIs have been weak. Japan came in at 46 in August, which was in July, sorry. It was incredible considering that they hosted the Olympics. So I think the rhetoric at the first half of the year, which was demand will get better second half as vaccine programs roll out, data has come in poor and it's weaker than forecast. The Fed are obviously, there were rumors that they were talking about tapering stimulus measures. So it spooked a few people. And I think there's been, like you say, it's been holiday season too. So there has been some volatility due to low liquidity. It's been quite quiet over the last few weeks. Perhaps, as you say, over the next week or so, people come back. There'll be a bit more bargain hunting, which I think is what's going on at the moment. 65 oil, I think the funds would buy that. And if they can make $1.50 in a day and, you know, they're happy to do it. So need to see a bit more liquidity back. But overall, it's a bit of a bearish sentiment at the moment in oil markets.
Let's go to Sydney. Peter McGuire, CEO of XM Australia. Picking up on that point, Peter, is this a buying moment? Does this $65 oil and the correction we saw across all asset classes last week offer a kind of a get-in moment, or is this still got some downward motion, do you think?
Well, good morning, Sean. You know, I sat at 62.17 for WTI only a couple of hours back, about 8 hours ago, and now it's the best part up, you know, 2.5%. So it's had a nice day. Everything's in the green, some big moves across Asian equities. And let's not forget, last Thursday is that largest fall in history for iron ore, down nearly 14% for the day. So it really shocked, it shocked the market tremendously and it drew everything else down. So yeah, I think it's probably like anything, Sean, such a big move to the downside. It bounces from those lows and you've had a nice uptick today. It's been a very strong move. So does that momentum last? Let's see. It's a big week. It's an electric week as far as data. The PMIs, as Matt mentioned, you've got Europe PMIs, you've got the British PMIs. They're all out in the next matter of hours. Don't take your eyes off Jackson Hole. What's the storyline as far as, you know, the COVID lockdowns and where we sit in Australia and all of those sort of points. But US equities are bouncing strongly to the upside. They've just continued their momentum, Sean. So really, if you've been an equity trader, the last 4 to 5 months has been fairly good results. Crude's a different animal, but it's certainly been incredible. As you mentioned, you forgot your shorts or you took the wrong shorts. At least you ended up in some shorts going to the beach, but we only hope. And our traders, I think, are rubbing their hands with glee, Sean, that it's been a tremendous month. And when you've seen these big, downdrafts really from the end of June, the last 7 weeks have been non-stop action. US dollar index, crude, have a look at gold, look at some of those base metals. If you didn't make $1, Sean, I think it's time to give it away.
Matt, on that point, ultimately, the kind of momentum trend, if you like, was sort of well underway last week, and the idea everything was moving in one direction. Oil bouncing this morning along with everything else. I'm wondering, what's the unique story of oil? You sort of indicated that it had a valid reason to fall off, but ultimately not a lot has changed. the fundamentals remain the same. Yes, there's a few extra barrels from OPEC plus this month, but nothing that great. 400,000 only a month ago was seen actually as quite bullish given the demand outlook. Inventory still drawing. Ultimately, where it counts, China aside on the margins, demand is still quite solid.
Yeah, I think that your last comment you just made, we can't discount China. And as Peter said, the move in iron ore last week, which had an extraordinary run, BHP numbers for first half were incredible. The market leveraged a lot of the demand, the return in demand last year versus China. And when, the famous saying, when China sneezes, the rest of the world gets a cold, that is certainly what's the market is looking at. That's where concern is coming in. The US demand has been good, has been resilient, certain parts of Western Europe. But these lockdowns, people are getting concerned that the numbers, like I said, have not been forecast, have not come in as forecast. They are causing people to panic a little bit. Fundamentally, you're right, Sean. Demand is growing, stocks are drawing. We are getting some supply back, but that was much needed. I think that Brent is in this range again. If you hit $65 a barrel and you keep on going down towards that 60 level, the market will automatically price in that an OPEC minister or two will come out with a headline that says, we probably will defer bringing back some production in September. So it's a very fluid situation. And with the dynamic of what OPEC are doing now, monthly meetings, they're being a lot more transparent, and new members who are also being transparent as well. The market is anticipating that when it gets down to a certain level, and it is that 60 level, that they will start thinking about production levels and if they need to bring any back, if demand is stalling. And China are certainly coughing, and literally, I hope they're all okay, obviously, but it's a concern that the market has in general.
We had a headline, Peter, out of China today saying that once again they've nailed this COVID outbreak from the last month. I'm not so sure about believing every data point that comes out of China, but ultimately the media seems to be giving them a general home run on once again slamming COVID back into the box. But there's clearly dynamics underway in China, regardless of COVID, the clampdown on different industries, releasing strategic reserves from oil, from iron ore, from other commodities. That COVID aside, China is in a particular moment that is all contributing to a weaker economic outlook.
Absolutely.
Sort of self-imposed in a way.
Yes, it is self-imposed. And as building on what Matt mentioned, only a couple of weeks ago, and the Gulf intelligence was off over that period, but we've got to remember that it eased its banking as far as the retail sector, assisted that. So, flooding more liquidity to the market. We understand and they've been saying it for years now, as far as their property market is pretty well cooked. Maybe it's time for a little bit of a pullback, and they're trying to stimulate as hard as they can. The storyline as far as COVID, I'm just reading on Bloomberg, they've knocked it over in a month, hard lockdowns, or draconian, I think was their terminology. If you believe the rhetoric, well, yeah, that's good. And the other side, of course, we've got to wait to see how they perform over the next matter of months. Their equity markets is doing okay. It's moving quite nicely, but just let's see how it goes as far as PMIs. Is it going to have, we saw those Japanese numbers, is it going to, run across and be more of a contagion across Asia, that softer growth over the next couple of months? It was only this time last week, Sean, that we were saying that New Zealand was an 80% chance that it was going to raise rates, and a 20% chance of actually having a double hit. So it would have been a 0.5% rise. That didn't materialize. So that just demonstrates the fragility out there across all markets and how China positions itself. I've just got to wait and see from
the Asian demand
stance as well.
The Asian demand story seems to be, clearly, whatever you take in the US, marginally, the driving season not as great as expected, whatever. Still everything moving full throttle pretty much there, and Europe coming back. But Asia, being the largest growth and demand for OPEC plus countries, typically is the sort of sick child in a way. And I'm wondering, from your perspective, how great is the appetite in Asia, Australia in particular, the center of it, for more lockdowns? The general narrative in the US and Europe is, regardless of infections, there's just zero appetite for the lockdown option. Clearly, that remains the main tool in Asia. Any resistance to that?
Well, yeah, I can only say after, I think we're in week 7 or might be even nearly week 8 of Sydney being in lockdown. So it's a 5K radius. I think that people are pretty well over it. I think there's some doubt there as far as numbers, and the general consensus is it's such economic carnage for small business and small enterprise, Sean, that do people actually bounce back? That's a major issue. So I think that's the word on the street in Australia, and they're more focused on what's happening domestically here than what's happening to the north. I don't think anyone really in Australia is too worried too much about what the situation is in China. They're worried about what's happening here economically and psychologically. We've got a service called Lifeline, which has been in operation for 58 years, and it's a service to help depressed people, suicidal thoughts, and so on. They had their largest day ever as far as fielding calls from the man and woman on the street, and that just demonstrates the fragility and the psychological turmoil that many families are living through at this time.
Yeah, it's interesting to see where that go. Ultimately, there's some countries you just don't have a choice to say anything, but in others, obviously, there is an opportunity to voice opposition to further lockdowns. And
look at France.
Yeah, well, that's right. And look at the UK, that completely opened up. For many reasons, ultimately, one hopes because they're or close to fully vaccinated. Matt, the structure of the market at the moment, we talked a bit about it yesterday. I'd welcome your insights. We've got obviously until today, the front month falling, but backwardation still locked in. Structure is relatively infrequent, which indicates something's got to give, either on the front month or on backwardation moving to contango. Your thoughts on those coexisting and where they go?
I've been keeping an eye on this, to be honest, out until the end of the year. We trade against posts, so you always want to be at the end of each quarter. You want to leave yourself a position at the end of each quarter. So you look at, say, September versus December. That's an important structure that the crude market will look at. Obviously, we're now October, December. Last week, when we saw flat price come off, we had October, November Brent, the front month spread, at 30 cents. Now, it's continued to come off over the last 4 days, but that spread has gone bid. It's now worth 45 cents. So there is this odd convergence between poor demand, which is why flat price is falling, but structure not there compensating for that flat price fall. It should go the other way. It could be a variety of reasons, Sean. It could be that the people who are, you mentioned the point on the radio this morning about people who are investing in the market and not oil professionals. They're using it as an asset class and they can make some money, quick money on it. So they're not perhaps looking at the importance of prompt demand, what it does to the physical market, because that front month would be a physical play at the end of each month rolling their positions. So it's going to be a very interesting week to see what happens there. We've got October Brent expiring next Tuesday. It could be something as rudimentary as someone taking a position and says, right, when it comes to the second day before the last day of the month, I'm going to sell it. And then it gets into contango. So it will be, once we see how it pans out, I think then you'll see the people who are investing in this market. Because right now, fundamentally, with demand spluttering with weak Chinese data or weaker than forecast and more oil coming back, that structure should be getting sold off. So it's a unique position that we're in.
Peter, you mentioned earlier the big sort of outlook this week is the Jackson Hole meeting of the world central bankers, now virtual, not happening in physical in Wyoming, but virtually. But nonetheless, my question to you is, I would expect that all of their speeches would have been written last week, all of their little beaver bees been typing away most of August, give them their speeches. Do you think they're back at the computer, busy editing those speeches, given what's happened in the last week? Or is that trend that what's led into here locked in? What's your sense of the flexibility, the change to where the Fed thinking is? Because a week ago, it was clearly we're all thinking about tapering.
Absolutely, Sean. And I think they're still beavering away on their typewriters because it was nearly a done deal. As far as the market was concerned, it was done with New Zealand. And I think the rhetoric would have been built on that, okay, well, we'll start to taper and yeah, we've got to contain inflation and everything's, we're back to a more rational cycle. And I think that it's been derailed a little bit, Sean, in the last couple of days. I think the China story, I think that big washout Thursday, I think the overall weakness from globally and the lockdowns and, what's happening as far as COVID in so many different parts and in America. And I think that's the issue. That's what's scaring, I think, all of those central bankers. And I'm not expecting a great deal. This time last week, I was thinking, okay, it's going to be game on. US dollar will probably rally a little bit further and it's all blue skies. But I don't necessarily think that now with, 72 hours till its launch date.
But something as fundamental as shifting central bank policy from accommodative to slightly restrictive. I mean, slightly, ever so slightly. Talking. Really, we're not even mentioning rates here. We're simply talking about going from $120 billion of asset purchases a month, maybe to 100. Right? I mean, this is on the real margins of tightening. So my question ultimately is, would something that fundamental not be sort of locked in, that a week or two of uncertain sort of change in the wind isn't going to alter that trend line? Or is it that fragile? Your thoughts?
I think it's that fragile, Sean. I really do. I think it's a week-to-week proposition. And I think that traders and certainly central bankers are mindful. They really, it's like dancing in a little bit of quicksand. They're not sure where how solid their feet are going to be. And at the moment, it's a precarious situation. And again, building on that New Zealand theme. So that was going to be first cab off the rank. That was really a change, I think, in policy, in mindset. And that's really, I think, been derailed. So I'm looking forward to hearing what Jerome Powell has to say. I'm not expecting any surprises. And I think that it'll just be very much the status quo. We'll talk about it next month. Inflation's, they say, is under control, but I don't think that's necessarily the case. And we've just got to see how we are in another month.
Matt,
if I can add to that, Sean.
Please, yeah.
I completely agree with Peter. I think that got washed under the carpet a little bit, was that New Zealand interest rate decision. Arguably it would have been the first major economy to shift policy and start increasing rates. And as Pete said, it was probably a decision that was made in the 6 hours before they had a meeting. But I think that their agenda and their policy was set in stone maybe a month beforehand. So the whole situation is so fluid. And look, Jackson Hole.
And fragile.
Yeah, exactly. Totally fragile. Jackson Hole, they're not going fishing this year because they're going to do it over Zoom. So the irony is that Jackson Hole will be held over Zoom, which is just basically a meeting they're all going to have. And they're going to talk about tapering monetary policy. Look, I agree. I think that the buyback scheme will be negligible, how much they decrease by. I don't think the interest rates will be increased any time this year. But I think that there will be talking about it. And it's that first step, the minute that free money is pulled. And what does he say? Before the party starts, they're going to take away the punch bowl, right? So it won't pop the balloon, but it's a bit squeaky,
This is the punch pool, not the punch bowl. It's a sort of larger version. Yeah, there was a bowl, I don't know, back 20 years ago maybe, but this is some sort of, orgy in a pool. Let's go to the survey question and give everybody some sense of momentary pause as to
I know
where
you went on holiday, Sean. By the way.
all this is going. Brent crude oil will end Q3 closer to A, B, C, or D, 1, 2, 3, or 4. Put your finger in the wind maybe, but ultimately your thoughts on Q3, end of Q3, of course, is a month from now, end of September. Could have been a bit more generous and went to the end of the year, and that would have been a bit further out for everybody to think about. But in a month's time, where is the oil price on Brent going to sit? Closer to 60, 65, 70, 75. Your thoughts, and we'll think about that. I'm kind of at a loss, to be honest. I'm kind of pulling the trigger here. Just to acknowledge that Laurie Hatayan, MENA Director, Natural Resource Governance Institute, is not with us this morning as planned, because unfortunately, Laurie is a victim of Lebanon's incredible mismanagement, where this morning she woke up to no electricity and no internet. Just when you think Lebanon has hit a new bottom, it just keeps falling out, and they find another one, and they're down to the fundamentals of electricity. And with that, obviously, everything that goes along with the basics. We wish her well and all in Lebanon for some relief. Looking out, Peter, as to where the other issues go this week, you mentioned the PMIs. Clearly, Monday morning, the markets opened with a pop, a little optimism in the air. Sentiment might be shifting. Dead cat bounce, says the chat room. Your thoughts?
Dead cat bounce. I think it was oversold, Sean. I think that there's just a bit of a boom time. Traders have been able to enjoy a very, very strong Monday. Asia, Taiwan bid strongly up, South Korea, China. Overall, a general very positive theme built on Friday evening from their equities in the US. As far as crude was concerned and commodities, well, energy and some of those base metals, they were oversold. They were spanked down Thursday, a little bit of a bounce Friday, and then they've just recovered.
Should we read much into the Chinese? Should we read much into the Chinese news of sort of getting, obviously, this wave of COVID? I mean, not to speak too soon, but it does appear, according to reports, that they have locked it in. Is that a big factor for the sentiment in the markets, given what happened in the last month while China was dealing with a sort of fairly minor COVID outbreak from global terms, but nonetheless, the Chinese react quite forcefully to that, locking in certain ports, backlog on shipping and so forth?
Yeah, well, that could be the case, Sean. I mean, you've got to add that to the ingredients of the cake of why it has bounced. So yes, I'll give that 30% for today, and that's been demonstrated across other Asian equities. And just the overall, it was sold down, spanked down hard, and it's bounced. And I think it is that dead cat bounce. I think it'll move on to might go up another $1 or $2, but I think this week it's going to be fairly flat.
Matt, we talked a little bit about their Fed fragility, central bank policy being still in an uncertain space. What's your sense of the sort of oil central bank, OPEC Plus? Are they similarly fragile, similarly flexible, do you think? Or are your thoughts on, they come up to the end of yet another month, an opportunity each month due to their structure to meet and to make changes? Your thoughts on, do they have that same sense of fragility?
Yeah, look, I think everything is very fragile at the moment. So I'm not sure if that's a platform to launch from or it's a precipice to fall off from. So, I've been trying to write a piece on OPEC and what my thoughts are. And you can form such a strong argument to hold back supply and to bring supply back. Biden's energy policy is obviously not for the US drillers. So he didn't ask them to increase supply, but he has asked OPEC. Would he ask them now with flat price at $65 a barrel? I mean, we'll find out what his sweet spot is. OPEC, look, they have done an extraordinary job since April last year when Brent traded down to $20 a barrel. They've come together as a group and they've shown resilience, and compliance has been extraordinary. It's been great to see. When you come out of an agreement, it has to be as strong as an alliance that you go into it as. And last month, we did see some supposed issues between Saudi and the UAE regarding production quotas, and that was resolved. I think it's certainly on incredibly fragile. I think if Saudi suddenly say, well, look, I think we should get together and we shouldn't bring the supply back, we said we would, I think you will see some resilience from a lot of the members who are so reliant. Kuwait have got a 33%
I mean,
budget
ultimately,
deficit.
when you get into that discussion, Matt, you're talking about very few countries, because most of them are had already been pumping at near full capacity before August. And so when you get into the idea of cutting, if you are not proceeding with increases, then you're really talking about very few actors.
Yeah, look, I totally, but it's not necessarily, Sean, the amount of barrels they're bringing back. It's about the market's perception on the strength of the group. I think that's the key thing, because we saw gloves off last year, Saudi and Russia fell out, and it just compounded into a market that drops, exponentially over a very short amount of time. The market isn't necessarily concerned if it's 200,000 barrels or 600,000 barrels that are going to come back. That's negligible in the grand scheme of things. But if the unity is evidenced within the group, the market has confidence in it. So I think that they're more concerned about, is everyone getting on? Are there any issues? Rather than, okay, we're not going to bring back 300,000 barrels a day. So it's perception more than actual numbers, in my view.
Well, I suppose by abandoning current policy, you open the Pandora's box for there to be divisions, and maybe that's just not worth it. And if there is a tweak, you would think, Peter, that it might be Saudi using that 1 million barrel a day cut they've used before. Maybe not all of it, maybe a little bit of it. Let's just get the survey result before giving Peter the last word here. So the room is feeling a bit bearish this morning. Biggest likely is at 60, 65, then second, 70, third, and nobody's pumping on 75. Peter, just to finish off a little bit on the story of Afghanistan, which of course has been the sort of horror headline story in the news the last week. My thoughts, obviously, bringing it up is, what's its impact in other spaces? My sense is that it does really limit Joe Biden's ability to have any other bad news, like a tightening of taper or other things in the American narrative. This has been such a bad wicket for him. Your thoughts?
Yes, absolutely, Sean. I mean, you're hearing so many different voices out there as far as impeachment, as far as the 25th Amendment, Kamala Harris going to be moved in, and it's pretty easy until you actually work through the framework of it. She needs 8 out of 15 congressmen to say that they have a vote of no confidence for Joe Biden, and there's no other, he's just marched out the door. She is president. So that's how simple it is. So there's the real storyline at the moment. So I think that everyone's mindful of that. As far as Afghanistan, what's going on with those American citizens still there, that leaves everyone scratching their heads. And it's just hard to, I mean, you're so close to it from where you are geographically. We're a hell of a long way away. And we look on it with a little bit of just what is going on, with memory so closely aligned to helicopters flying off the roof of in Saigon in 75. So that seems to be a similar mindset and a similar course of events. How it moves forward from here, Sean, I think the simple line, the Taliban had it 20 years ago and they've got it back, and the Yanks have spent about $1.5 trillion.
Well, it does seem like an incredible own goal on the Biden administration part. Nothing sort of screaming essential that he needed to sort of pull the trigger on this policy. But I do think having thrown the boulder into the pond, the ripples will have a serious effect. That's not to say that Afghanistan hasn't been a disastrous policy for many presidents, but he owns the bucket now, and clearly he has made a wrong move on this particular moment. And the consequences, I think we're going to have to wait and see. Even the
Yes.
infrastructure bill might be a victim of it because it still needs ratification from the House, and there is a lot of resistance there already. So there's many ways that this could impact domestic US politics, and I think we need to keep an eye on that. So that's it. That's a wrap. We're thinking of Laurie this morning in darkness in Lebanon. Matt Stanley, thank you for your thoughts this morning, this Monday morning. Peter McGuire from Sydney. The market's open in Asia with a nice pop. Let's see if it sustains through the week. We'll be back tomorrow, 10:30 every morning UAE time. All the best. Have a good
Cheers.
day.
Thank you, Sean. See you, mate.